afternoon, distinguished ladies and gentlemen. All protocols observed. His Excellency, Mr. Charles Abani, who is the moderator for this session, Your Excellencies, distinguished ladies and gentlemen, it is a privilege to have been invited to set the context for this afternoon session, which is under the theme filling the funding gap for infrastructure. I extend my warmest regards to distinguished panelists for this session and wish them very best as they discuss the topic under consideration. Ladies and gentlemen, infrastructure is essential for unlocking economic growth and development and improving the standard of living of the citizenry. Infrastructure financing is confronted with many challenges. The world needs to invest around $6 trillion annually in sustainable infrastructure to meet the UN sustainable goals by 2030. The UNTAD previously hinted that achieving the SDGs will require an investment of around $5 to $7 trillion in infrastructure. The global infrastructure financing gap is estimated to be around $415 trillion by 2040, according to McKinsey Global Institute, Asia Development Bank, and Organization for Economic Cooperation and Development, OECD. The World Bank and the African Development Bank estimate Africa's infrastructure financing gap to be around $100 billion annually. In Africa, in particular, this infrastructure gap has led to deplorable roads, erratic power supply, housing deficit, among others, leading to poor economic conditions for our people. The lack of resources to address these infrastructure gaps is underscored by a number of factors, including the following. 1, inadequate domestic resources. 2, a high public debt. 3, an undeveloped domestic financial sector. And finally, high funding costs. Distinguished ladies and gentlemen, I believe it would not be out of place to examine the continent's recent experience with infrastructure development and why we have made limited progress in closing the gaps that exist. In the post-independence period, many African governments set out to develop infrastructure to sustain the many state-owned enterprises which have been established to kickstart the much-touted era of industrialization. This resulted in widening fiscal deficits, with some resorting to deficit financing to close the gap and weakening their currencies in the process. Data from the International Monetary Fund showed that some countries' debt levels had exceeded 100% of GDP by the early 1980s as a result of the colossal expenditure drive. Over time, the wide fiscal deficit led government to rein in infrastructure spending in a bid to stop slippages. While the Bretton Woods Institution Structural Adjustment Program was primarily focused on providing countries balance of payments positions by adjusting the structure of the economy to promote international competitiveness, a key program objective was to ensure fiscal austerity. Governments were advised to reduce the fiscal deficit by increasing domestic revenue through tax hikes and expenditure cuts. A lot of emphasis was placed on bringing debt within sustainable levels by managing fiscal deficit. Thus, the infrastructure budget declined significantly owing to efforts to rein in the fiscal deficit. In the 1990s, pro-pure growth initiatives, as espoused by the Millennium Development Goals, recognized the primacy of infrastructure development in alleviating extreme poverty. This brought infrastructure development back to the front burner, even though the budgetary allocation to it was rather inadequate. In fact, most African countries spent less than the recommended 9% of GDP, the minimum to catalyze poverty alleviation, on infrastructure development. However, given that domestic resources are not enough to finance these interventions, African countries have consistently faced recurrent budget overruns and increased debt burden. This has placed many African countries back to the 1980s and 1990s context. As at the end of 2023, no less than 15 African countries had their public debt exceeding 70% of GDP, with many others in the high 50s and 60s. This is a challenge for sustainable infrastructure development. The narrowing fiscal space, high funding costs, and increasing debt burden require a new financing strategy for Africa. This explains why the interventions like natural resources for loans and public-private partnerships have gained traction in the 21st century as government explore off-balance sheet strategies to deliver critical infrastructure to the populace, even though these options are not without challenges. Development finance institutions like our bank, that is the ECOWAS Bank for Investment and Development, where I work, have played various roles to close the infrastructure gap. Billions of dollars have been spent on transport, energy, education, health, telecommunications, and other critical infrastructure. But the rate of population growth outpaces the growth of infrastructure delivery. The ECOWAS Bank, where I work, has so far invested $4.2 billion across all the sectors of the economies of West Africa in the area of energy, health, communication, technology, and so forth and so forth. A burgeoning middle class means that we must redouble our efforts to close the gaping funding gap in the shortest possible time. Ladies and gentlemen, this is our reality. Inadequate infrastructure in the midst of inadequate financing. The search to find innovative financing solutions to develop infrastructure to fast-track economic development in our part of the world continues. As we navigate the complex landscape of 2025, these challenges should engage the attention of governments and the private sector in order to make a significant impact within the circle of our influence. Having set the context, it is my hope that the distinguished panelists here, who have years of experience in the financing space, will profess some sustainable solutions to the funding gap that we face as a continent, and as we seek to develop our infrastructure, return our countries to the path of high growth and create wealth for our people. It's on this note that I wish you very fruitful deliberation. Thank you for your kind attention. Thank you.
Dr. George Ajekum Donko is the president and chair of the board of directors of the ECOWAS Bank, I beg your pardon, for investment and development, setting the tone so expertly for this panel. It now falls to His Excellency Charles Abani, United Nations Resident Coordinator to Ghana, to moderate this panel for the next 45 minutes. Over to you, sir.
Hear me? Okay, great. Thank you very much. And indeed, let me stand on all the existing protocols of respect to this distinguished audience here today, and indeed the distinguished panel. I think the opening session did an admirable job in terms of setting the broad context of the issues that we need to engage here. And thank you too to our context setter, who has reinforced essentially that trillions and trillions of dollars are at stake globally if we're to achieve the context that we're in. And for Africa, just to add another stat, I think AfDB estimates somewhere between 68 billion to 108 billion as, and I'm going to change language a bit, the financing gap. Not necessarily the funding gap, because funding often refers to people giving money to people rather than us creating the kind of resources that we need. So of course we have a number of challenges, a clearly unjust global financial system, which the UN has been pushing quite strongly on, that has created a debt overhang, particularly on the continent, a raft of issues, and I'm going to be coming to the panel to ask for their insights on really how we overcome this financing gap. A number of the panelists this morning have spoken about some of the areas about energy, and we know last week or earlier this week there was the 300 mission 300, which is the big Africa energy event that happened in Tanzania in Dar es Salaam. So energy, transportation, digital, we've talked about. One I'd like to highlight, and I see this as only opportunity, is the climate challenge. And I'd like you to turn your heads to that. Because on the one hand, many advanced economies are having to retrofit to attain net zero. Africa is not a net contributor to climate change, and therefore the opportunity is green, clean growth. And I think this is a key area that we need to think about. I think the other thing I would like to bring to the table, a couple of points as you think your way through the questions that we have, is first of all, and I think from the Africa Union, we heard that Africa is not poor, but Africans are poor. We are in the midst of wealth. So what do we bring to this table, and how do we leverage that? And in one of the panels earlier this morning, someone asked the question, what's our skin in the game, rather than relying on others? So this is a really African-driven conversation from a perspective of how we harness our wealth and our indigenous knowledge, rather than have it reaped and turned back to us. I know that there have been changes in the names of the panel, so if I don't use your names, please forgive me, because I know there have been a few changes. I really want to open up and ask all of you to just share a few sentences and reintroduce yourself to the crowd as you kind of elaborate from your points what the key strategic gaps and challenges are for us. And if you can also think about, you know, this feels like an elephant, and if you try to swallow it, you will choke. 108 billion is not snuff, as they call it from my country. So where are the priorities that you see for us to begin to close this gap? And I'll hand to you, and please ask you to reintroduce yourself.
Okay, thank you very much. And it's a pleasure being here today. My name is Afolabi Obicheson. I'm the Vice President, Product Structuring and Distribution at Premier Invest. And I'm representing René Awamberg on this panel. It's a pleasure being here today. And as we gather here today, our collective aspiration is to unlock the potential of the African continent through infrastructure development, particularly the ambitious project of a pan-continental railway network. But it's good, before we put things in context, it's good to highlight some of the challenges that we have seen in terms of the inefficiency in our railway infrastructure in the continent. Part of those challenges is, one, is deteriorating infrastructure. You will all agree with me that the continent has infrastructure that is deteriorating. Going beyond deteriorating infrastructure is the point of fragmentation. There is a whole lot of fragmentation and inefficiencies in the infrastructure that we have. The other points to note is limited interoperability, as you may see. Then there is also a question around funding gap. The funding that is available today cannot actually bring the infrastructure that we need to connect the continent. So we need to find a way to address the funding gap. There is an issue around project viability. Most of the projects being done, are they being done? Are they commercially viable to attract investors to come into it? Then we also have, there have been a lot of dependence on traditional funding, where we get funding from bank. As we go along, it is clear that traditional funding may not necessarily solve this problem. We need to create a new innovative funding structure, which we talk about as we go along, in order to unlock capital from the markets to do this. We also highlight some of the innovative financial model that we think can help us in resolving this challenge as we go along. So this will be my starting point. I believe that as we discuss, there will be new ideas that will come forth, which we discuss here. Thank you.
Thank you. Thank you very much for those introductory comments. And I'm literally going to go down the roads, down the team here, so you know when you'll speak. Over to you.
Sure. My name is Antoinette Kofi. I'm the Chief Finance Officer for MTN Ghana. And I have a banking background as well. So you ask a good question, or you ask a number of good questions. And from where I sit, I think there are different ways to look at this. If I think about the challenges, the funding challenges, or the financing challenges as you put them, you ask the question around what skin do we have in the game? The reality is that capital isn't that easy to find in Africa. And there's a tendency for us to depend on the West or more developed countries. And if that is the angle we are taking, we have to think about what makes it easy to get access to some of these funds. Do we have investor-ready projects? And you may ask, what do I mean by investor-ready projects? For someone to put their money into large-scale infrastructure projects in Africa, they need to believe that they're going to get their money back. First of all, most African countries have volatile currency environments. And so if someone from the West is going to invest their money for a long term in an African country they are investing, let's say, in dollars, and they're going to earn back their money in local currency, and you have the volatility in the exchange rate, how do you guarantee them that they are assured a return? And we need to think a bit around how we do that, because if not, nobody would be willing to put in their money. Secondly, our regulatory environments are very scattered and very different in a lot of ways, and they tend to be reactive also in a lot of ways. You would find, example, tax laws changing overnight. You will find issues around expatriation of cash. You need to be able to assure your investors that when I bring in my money, it will be possible for me to get the money back to the source of origin. With so many African countries getting up and overnight saying, you can repatriate your money, how do we boost investor confidence to allow them to invest in Africa? Also, how do we assure them that we have the right legal and regulatory frameworks that mean that when the funds come in, they will be applied for the intended purpose and not just taken elsewhere to do other things? So if you're an external investor, these are some of the things that will play on your mind. And we need to think as Africans how we solve these challenges in the eyes of our external investors to enable them to come in. And we also need to think about how do we as Africans find a way to fund ourselves. We've got to have skin in the game. In banking, there's a syndication principle which helps people to mitigate their, different banks mitigate their risk. They take bite-sized chunks. They take as much risk as they want to in a particular project. But because there's so many different banks, they can come together and fund a large project. As Africans, we need to start thinking as well as one unit. Success in this is about playing as a team. Success is a team game. And maybe we need to start thinking about how do we collaborate across different African countries, operate seamlessly as one unit, bring our funders together, bring our banks together, bring our ideas together and fund projects across the continent. Because with skin in the game, we will be willing to take more risk for lower return because the returns come back over generations and future generations get to enjoy what we have invested today. So those are a few thoughts I have on the matter.
Thank you. Thank you very much. Really helpful thoughts on how we approach this differently. Yes.
Hello, good afternoon, everybody. My name is Sarata Konetiam. I'm the regional CEO for UBA Africa. So I have coverage of about 9 countries. but the group is actually present in 19 throughout the continent. And for us, the prosperity of Africa is actually at the center of what we're doing. And to go to your point in terms of the gaps, I think that my predecessor have actually covered a lot. In terms of the regulatory framework, I agree that this is completely a stopper in terms of the challenges we face in financing some of the infrastructure projects that we have. We also have the limitation in terms of, or the over-reliance in terms of debt, as it was also said. And that is coming from a misunderstanding or misconception of what actually needs to be done and how it should be done. The other point that I feel is very important is that there is a high perception, and I think it goes beyond perception, that it's really high risk to invest in Africa. We spoke about the volatility earlier on. We spoke about, being repaid. Even when there's willingness to repay, sometimes you no longer can find what you have injected as initial capital. So these are challenges and issues that, we need to really look at and close. The last point maybe that I would want to bring in is that there are limited bankable projects. So at the end of the day, we are talking about developing the continent. We are talking about, doing infrastructure. But once it comes to execution, we need to have something that is bankable or financeable. And that's where there's a huge gap that we need to close with understanding of the needs and then closing them with those gaps. The last point would be to ensure that as much as we are looking at infrastructure, we need to be looking at other items that are also as important in terms of the people skills development, because they are the ones that are going to be operating that. And we will talk later about the bankability or the structuring of some of these projects that can make them a successful one. Thank you.
Thank you very much for those insights. I will come back and summarize because I hear a lot of connecting threads. But let me allow all the speakers first to make an opening statement. And remember, please just remind us who you are.
Good afternoon, everybody. My name is Olumide Ogunfora. I'm a founding partner at Argentile Capital Partners based out of Lagos. I think the quick comment I would have is that the problems are always going to exist. I think part of the solution, though, is what can we do that is within our control? And I want to borrow on actually the successes that have already been achieved in the past. We all know that today we will actually be in deeper trouble if it was not for the financing activities and the support that this continent has been receiving from the African DFIs and sovereign wealth funds. Collectively, they now have assets just about $250 billion. But think about it. 30 years ago, 40 years ago, when they started, the equity that was put in there was, I think I can speak for AfrEximbank, it was less than $1 billion. And these professionals have turned that around from $1 billion to almost $40 billion today. And we see the impact that they have. So my question is, what are the other sources of capital that we can tap into in Africa to make a difference? This is not to say it is not going to be done in conjunction with the other financing sources. Two things come to mind. We have, between the pension funds and the insurance funds in Africa, $1 trillion under management. Now, due to different regulatory issues, incentives and whatnot, the percentage of funding that's actually going from these institutions, who, by the way, are actually properly aligned, best aligned to invest in long-term projects, is less than 1.5%. So the question is, we need to take a risk. We need to be deliberate. If we held incentives or provided incentives at the government level and, indeed throughout the ecosystem. And we were able to direct just 1% of this $1 trillion, right? That will give us $10 billion in capital, which can be used to address the more risky elements of the infrastructure development stage. My sister just talked about lack of bankable projects. It's a real problem. Everything needs a couple of $1 million or maybe sometimes less. But the point about it is that assume for a second that we invest that 1% to actually nurture and grow and de-risk these projects and make them bankable. Assume for a second that we actually lost everything. It really doesn't change the perspective for our pension funds and insurance funds. However, assuming that we were successful, as already has been demonstrated by the African DFIs, we can leverage this 10 times, 20 times. It's not going to happen in a day, but we can leverage it so that way, people come in, they go out, these funds will be disbursed and managed through professional managers, even existing DFIs. And I think quite a few of them are actually addressing this equity gap in the funding. Because when we talk about the funding structure or the funding gap, the biggest hole is actually the equity gap, but it is actually the smallest to fill. So my own initial comment is that we need to look at what is within our control, provide incentives for pension funds as an example, or even individuals, or even diasporans. You can have tax incentives, you can have all sorts of things, but my main comment anyway is that before we go to London and New York and China, let us look at what we have in Africa. Thank you very much.
Thank you very much, Olumide. Really, really insightful points. Let me come to the next penultimate speaker.
Hi, so my name is David Ziambi. I'm a partner at Latham & Watkins, which is a global law firm. I'm quite disappointed that I didn't get to go before this gentleman here because he stole my speaking notes. I would actually like to add some more context to what he mentioned, because this is something that has been a key point of focus for myself and a few of my colleagues, looking at how to deal with this funding gap in Africa. If you add to the pension funds and the insurance companies, the sovereign wealth funds, the number edges towards $2 trillion. This is capital that exists in Africa with African entities that can be deployed in Africa, which can take out or to some extent mitigate some of the traditional risks that we see when people look at us as Africans from abroad. So currency risk, political risk, these elements can be explained a bit more easily to someone who is local, who is holding local currency, but when converted, comes up to $2 trillion in capital. Ultimately, I think a lot of this is shortcomings in legislation. So this is something that local governments at the national level have to address. The legislation is antiquated. If you look at pension funds abroad, the CPPIB, the Canadian pension funds, they are all investing in infrastructure. It's long-term capital that's being put to work for long-term solutions. So infrastructure development, digital infrastructure, all of the things that we've been speaking about today are actually to a large extent addressed by long-term capital invested by large pension funds and insurance companies abroad. We have to ask ourselves why this isn't something that our own governments, well, not our governments, but our parliaments, our legal systems haven't been updated to address. Because if they did, unlocking even 10% of that actually addresses the annual gap, right? So 10% of 2 trillion, we do the math, is $200 billion. So that's number one. So again, thank you for stealing my notes, but hopefully I added a bit to it. And again, this is it must be differentiated from the likes of private equity and those kind of capital. They're not long-term capital. So deploying them in the African market for infrastructure, for me, is not a viable solution. It will work in a few scenarios, but not all of them. The other key issue is banks. The depth of our capital on the continent is a key issue for concern. If you look at our banking system, the depth of our banking system in Africa, the strengths are basically South Africa, Nigeria, to some extent maybe Kenya and North Africa. The continent cannot finance itself through commercial banking like other continents do. That is a key issue that we need to address. And again, if you look at the longer sources of capital, they have adapted to fill these similar gaps in other jurisdictions where they've moved to providing private credit solutions as well as equity solutions. And when they're able to lend and plug the holes that are in our economies because of a lack of depth of the banking system, that actually gives us another lifeline that will be cheaper. Because again, they understand the risk, and risk and return completely connected, and puts us in a position where African capital can actually fund African risk in a way that makes sense, both from an equity and a credit perspective. The last one that I want to raise is just building on some of the comments that have been made by previous speakers, which is the diaspora. We as a continent have not really understood the strength of the diaspora from either a funding perspective or a knowledge and skills gap perspective. I think probably everyone on the stage has spent time abroad, learning elsewhere, picking up skills elsewhere, and we are all Africans. There has to be a time when also the skills gap can come back home and actually begin to bridge that divide. But I'm also going to look at the funding particularly, and if we look at the diaspora as a 55th African state, they're the second most populous, so round about between 150 and 170 million, between depending on where you look. The income and the spending power is phenomenal. And bear in mind that what they're sending back, half of the time in remittances, is not done efficiently. It's net earnings, right? We are not in a position where, as diaspora, they're able to invest in products that are tax efficient, that allow them to maximize on their funds in the same way they would if they were investing in the local economies in the countries that they find themselves in. So whether it's double tax treaties, which is weighted to incentivize Africans being able to use their capital, that's hard-earned capital abroad, in ways that are tax efficient so they can maximize them, but also as Africans to be able to create the instruments for them to invest in properly. We have a key issue of perception, not only with foreigners investing in Africa, but with Africans investing in Africa. The question is, who will guard the guards? No one trusts the institutions on the continent. So who can we actually structure through to create trustworthy systems and trustworthy instruments that someone in the diaspora who has broken their back to create funds can invest in with certainty? Now, I'm not putting the burden on someone who's working jobs to send money back to fill this funding gap, but I think it is a critical element that we need to look at. From my perspective, it's the pension funds, the solution. That is the lowest hanging fruit, but I think looking at the depth of the diaspora market, their ability to actually hold up the so-called middle class of Africa is definitely untapped, and it deserves thorough investigation. Thank you.
Thank you very much. I think a bit later in this conversation, time permitting, we will come back to the diaspora, but it's worth $100 billion a year. And if the gap is $100 billion, maybe we'll do that. The last, but certainly not the least speaker, your thoughts on this introductory salvo, please.
Thank you very much, Mr. Chair. My name is Olashipo Shashore. I'm a partner in ALP International. It's a law and professional services firm made up of law firms across the African continent. And we pride ourselves in being African grown, offering global services to African businesses across the continent. It's a pleasure to be here, and I would have been sitting there and he would have been last if I had gotten out of my seat first. So some of my points wouldn't have been made. But no, honestly, I want to approach this from a slightly different point of view. And I hear the colleagues on this side of the hall who mentioned the risk, the confidence, the general trepidation with Africa in financing. And this is the reality. We're all aware of the deficit, and the statistics are out there. And we're all probably aware that deficit and the gap in financing of what the social and economic needs of Africa is compared to the availability of these assets, and it is a question of financing. And financing will bridge the need and the availability. But I think the most important question to ask is why is financing such an issue for Africa, and how can we resolve that? And maybe later on in the conversation, I will suggest a blend of different methods, alternative funding methods that are available out there, and many of them work in different respects. But I've been at several sessions, and I was at one today where PPPs were discussed, and the capital and the financing. And every time this is discussed in respect of Africa, the big thing that comes out is country and therefore continent risk. And the fact that, somebody said even on this side of the table that if I put the money in, how sure am I to get it back and all that? I'd like to say that there's a lot we can do about this. There was a wonderful report that came out last year from the Organized Crime Corruption Report Project. And its program was called Africa No Filter. It's headed by an executive director, a wonderful lady called Mokim Makura. And I'm being specific so that you can all verify and try and read the report and the data that was provided. That report concludes that Africa loses $4.2 billion annually due to negative, unrepresented, poorly reported, and unrepresentative narrative about Africa's conflicts, its poverty, its corruption, its unmanageability. And as a result, capital runs away from Africa, because the media is responsible for $4.2 billion of loss. And this media is not African media, I can assure you. This media comes from the northern hemisphere, from the western part of the world. And this media also happens to cohabit with where a lot of the financing and capital comes from. So you can imagine there's a poison towards Africa. So it's almost a losing battle as to financing, how you can get access to capital and access to really push the infrastructure projects that we're looking for in Africa. And so that for me is the accessible and most immediate, what is within our control solution, how to change this narrative. We've accidentally happened on it with our creative economy, the youth, and what they've done to project Africa positively. But there needs to be an intentional activity, concerted program to change this narrative and to be able to, because the funding also is domestic. Even domestic African financing is hesitant because of this narrative that is really rife. And it's almost a gold standard. Oh, I probably won't get my money back. Oh, the country risk, there's probably going to be a coup. And this is, I think it's absolutely negative, and we need to tackle it. I know maybe this is a bit left field, because you were probably expecting me to give you some financing apparatus, but I think it's within our reach and we can do something about it. But please check it out. Africa No Filter is the report, 2024. We lose $4.2 billion annually. Just to put that, fun fact, to put that in perspective, you could wipe out maybe 12 million children who are out of school and fund their education with that kind of money. And that education will leapfrog the education and the knowledge gap that we need to fight the infrastructure gap. That's what I'll start with, but I'll come back later.
Thank you very much. So please give the panelists a huge round of applause. Just from a range of points around deteriorating infrastructure. And we do have a maintenance problem on this continent that we just have to get over. Fragmentation, the need to diversify funding, the absence of credible bankable pipelines. I think this point, and I've been on a number of panels where private sector investors keep talking about volatility and the absence of policy predictability, which creates a disincentive to finance and this regulatory challenge. To how we begin to address debt, risk perception. I think one of the things about what you just spoke about media losses, if we also tack on to that, how does the continent seriously start addressing illicit financial flows that disappear from a country in a way that then becomes investable, if you like, skin in the game money, then it could be really important. To the points around leverage, and really starting to look at other sources, but create the same predictability. And in the UN, we started talking about kind of diaspora bonds. And people's eyes just roll up and they say, who? Invest where? And I changed my accent to make the point. Me, invest there. It's a lie. They'll steal our money. So how do we get past these big governance challenges that exist? So, you know, I think there's a lot to be said, and specific sectors where gaps exist. And I think this point about every project contains risk. How do we find riskier finance to manage riskier components within projects? So I'm going to move us on to the next part of this conversation, ask for shorter and sharper inputs. But as I was saying at the beginning, it's an elephant. If we look just in Ghana, and Ghana's not doing too badly, when we get the list, we're currently doing an analysis of where the investments need to go. 43 billion in Ghana is the figure US dollars. How do we prioritize, and what are those transformative things that we must invest in and connect those investments so that they leverage also? Because leverage isn't just about finding money, it's about making sure that the parts add up to more than the sum of the parts. The whole is bigger. So how does the whole become bigger, and where should, if you like, where should we be directing traffic for finance to go in order to create this needle-shifting transformation? Let me go back and start with you, Olasupo, because you were on the tail end there, and then I'll hop around a bit more this time that I've got some names. So what do you think we should be investing in? Because there's so much to invest in that it cannot all just be too fragmented. Where should we put our stock?
Well, that's a tough question. How long do you have? I know that the regular culprits when you think infrastructure, but I think it's actually the soft infrastructure, the infrastructure of the mind. I think the knowledge is where we need to focus investment in. I know that bridges and rail and roads and airports and broadband, I know the multiplier effect they have on economies. But you know, the intangible wealth of the globe is actually a lot more significant than tangible wealth. I mean, it's reported to be at least something in the region of 3 or 4 times as valuable, intangible wealth. And so human capital is actually a lot more valuable than you'd imagine in comparison to the next best rail terminus or superhighway and what have you. So, I know it might just be a bit, again, intangible. You can't hold on to it, but I think we need to make sure that our human capital, which we have as an asset above other continents in its demographic and its mobility,
and certainly with its creativity. So if I had to be intentional and I had a good budget vote, I'd focus on human capital and this infrastructure of the mind.
Thank you. I mean, the continent is the youngest continent. We have the largest youth population. Education remains a challenge, but for instance, digital technology can enable us to leapfrog in that space and get training out there. And definitely we'll need a workforce for the future. So I think we should hold on to that. If I'm hopping around and being a bit more gender equitable, let me come to Antoinette now to just say, what are your thoughts about the key areas? And please don't tell us MTN.
I can't not tell you. Okay, I think from the responses given before, one of the key areas, and I think my lady friend here spoke about human capital, I think is one of the things we need to get absolutely right if we're going to have any transformation on this continent. And we need to invest in human capital, not just for the technical skills, but even for the technological skills amongst others, because we tend to buy technology from the West, but we've got so much talent on the continent. MTN has a group of software developers on the continent, and they are all Africans developing technology for Africa's future. And it's possible. So how do we get to do more of these in other areas? It's important. And I think we've got to invest in our capital markets because they are an access to funding and financing that we haven't utilized well in the past. Think about it. Across the 54 countries in Africa, how many of them have vibrant stock exchanges? Actually, without MTN, even the Ghana Stock Exchange, after 30 years, was pretty bearish. Okay, so we need to invest in our capital markets, make them more vibrant, provide access. We've spoken about pension funds. We sit on a lot of liquid cash. And yet all these pension funds do in these parts is to invest in government bonds. That's not going to grow Africa. That's not going to transform Africa. Yes, government will use it for projects, but with all the bureaucracy and inefficiencies in governmental projects, that's not really going to transform the way we do things. But these pension funds, for instance, I've had conversations with some pension funds who want to invest perhaps in laying fiber, okay, across Africa. And a number of pension funds in different countries can come together to fund connectivity across Africa. And this would significantly transform digital progress in Africa, and that could transform the way we do a lot of things. So I think those are some of the things that we've got to do differently. And of course, we've got to transform our legal and regulatory frameworks. We've said that. I'm not going to go back over that. But I think those are a couple of things I would say.
Thank you. Thank you. Olumide, what should we be spending our money on if we have it, to spend it well?
Okay, so for me, I think we need to go back to the basics. And again, these are not things that we have not experienced successfully in Africa. For me, large-scale infrastructure, you cannot do without it. But we also need to focus on small-scale micro-infrastructure. It is the only reason adopting this strategy as an example in the telecommunications sector that Africa was able to actually grow and leapfrog a lot of the international markets in terms of the deployment of cell phone, connectivity through one tower at a time. So in essence, for me, when you look at the 650 million Africans with no access to electricity or the ones that don't have any water, the key thing about it is that let us make this thing a little bit smaller. It's distributed generation, it's distributed water, it's distributed industrial approach. From a portfolio management perspective, you are not likely, if you deployed $1 billion, right, through 1,000 smaller businesses, you are not likely to lose all of it. You may actually run into a problem deploying it to one, right? Now, I'm not saying that you shouldn't do that because they address a different level. But my point is that let us look at these opportunities, because then you will now have, let's say in my example, 1,000 SMEs deploying across. They can do a faster job doing that than like maybe 2 or 3 large institutions trying to build a system across a country or across regions. Now, just like the cell phone guys have done now, haven't developed that market. Now they're doing the fiber. Now they have the money to deploy to do fiber. But their initial money came from making 2-3 cents per call per minute. So that will be something that I will advocate.
Thank you. Thank you. David, so that you don't feel you're at the end, and then I'll come back this way.
No, that's fine. I think it's interesting because I think we're actually looking at it from 2 different ends of the spectrum, which I think is the right way to do it, because fundamentally, if you look at it top-down, we're too disparate in our approach. The mere fact that we're 54 countries and we each talk about what each country needs to do about their energy supply, we've already lost the game. If you were to ask me, I think we already have regional blocks. I think strategies around what is the best project that will deliver the best bang for the buck for a region makes most sense. It's criminal that we're still talking about constructing the Grand Inga Dam. It's crazy. That dam alone could power 7 countries if built correctly. So you have to ask yourselves, if that was an issue in China, would that dam still not have been constructed? They would have looked at it and said, this is fundamental, it helps energy, let's dedicate capital to it. And it would have been done. So I think a lot of what separates us is actually the problem, which is why I have a lot of hope in what the FTCA is trying to do, to actually bring us together regionally, where our regional blocks maybe have failed to some extent. Because there has to be some priority on what is the most efficient allocation of capital that will benefit the most number of people. So that's looking at it top down. I think to Olamide's point is like looking at it from the bottom up. We are Africans with African problems. I am concerned that in many ways we still depend on other people to solve our problems at a micro level. And that is where I think the real gains can be made. The telecoms is a perfect solution because the ability to transfer cash on your phone with one tap transformed into a whole range of uses because of organic creativity. And that started from the bottom up. A few people had great ideas of setting up telecoms institutions. Next thing you know, we have the most efficient telecoms sector on the planet. And I think this is the future for us, is looking at what our problems are from a micro level and fixing them. And it goes back to the education point. I think I was born and bred in Zimbabwe. My entire education was to bring me up to understand how to facilitate export. That was the purpose of my education from grade 1 to upper 6. I was bred to become a service industry professional, and they won. I am, right? But the emphasis on invention and innovation and creativity does not permeate our educational institutions, and it has to be taught from the age of 6 years old, because that's actually why these other countries are making things. They're not facilitating the export of raw products. Or saying, how do we get this railway to the port so we can export? They're saying, actually, the IP is ours. We have to build this thing. We have to be the ones to cure cancer. And then we'll have the IP to do that. And that IP is worth trillions of dollars. And someone has to rent that IP from us to be able to implement it in China or Europe or America. So that spirit of innovation, the creativity, is something that I think needs to permeate our educational institutions, and it's a more long-term goal, but I think that's the only way to get parity, because we need to begin to create. We can't just be service providers anymore.
Yeah. Thank you. Some really deep thoughts in there. Before I come back, there's a saying that the first shall come last and the last shall come first. Let me come to you, Sarata. What are your thoughts about investment priorities for the continent?
Okay, thank you very much. So I'll take a different approach because I think one of the threads that have come out is trust. Trust about among ourselves. We are not trusting each other, and let alone, external people trusting us. So we need to build that. We also believe that in successes brings success. People, once we build a solution that works, investors will come and they will want to be part of that success as well. So I think coming back to the point that we need to do it ourselves, definitely, because we understand better our problems and we can solve it better. I spoke about, project bankability and so on. So for me, it's important that, either being a small, medium, or large project, we need to build and invest into the preparation of the projects so that, it's understandable to everybody, ourselves to start with, and that we trust enough to actually invest in it. So that would be, something that we need to really work on. I understand that PPP was discussed earlier, and I want to say that PPP's results are quite mitigating, It's neither here or there, and it shouldn't be. It shouldn't be. PPP is about private and public, and we need to find a way to work, a work that is successful. And that needs to actually come up as a priority for everybody. The structuring of our PPP is flawed. And so we get to a point where when it's come to reimbursement or something, there's a coup, there's a change, whatever it is, then everything is put back into question. It shouldn't be. It should be sustainable enough and self-sustainable to the point where whatever external factor comes in doesn't derail from the project. And if we can build that in from a sustainable perspective, we'll get, great result. I think the last one would be in terms of our blend financing in general. Okay, we need to actually be more purposeful about it. We need to target them, and we need to go after such. So we spoke about the pension funds, how they can come in. We spoke about remittances, how it can be, a driving factor into the capital and so on. That also needs to be a conversation that we need to have all together, but prioritize them into success. Thank you.
Thank you. Thank you very much. And last but not least, by any means, please add your thoughts.
Okay, thank you very much. I believe that there are lots of funding solutions to attract capital. But the fundamental issue that we need to face in Africa is the issue around our regulatory framework and legal framework to be able to unlock capital. We can talk about pension funds, we can talk about insurance funds, insurance money, but is the regulatory framework today permitting the pension fund administrator to actually invest in those infrastructure? The answer is no. For example, in Nigeria, there is a stringent pension fund requirement that you can only invest in an investment grade asset. And for example, the pension fund will rather go to an investment that they consider to be secure and to be safe. And that's why you see them going into government securities. We have a company in Nigeria that did something very innovative. And what they did was to do a credit enhancement, where they do, to invest in infrastructure, they provide a credit enhancement tool for the pension fund to be able to invest. So what we then see is that there are a whole lot of infrastructure investment being done by pension funds because they were able to meet the regulatory requirement of the investment grade asset. So the question is, we can talk about diaspora bond, we can talk about infrastructure bond, we can talk about all these things, but is the regulatory framework today, as we have it, Is it permissible to allow those investments to come in? So the question is, we need to invest on people to come up with innovative solutions. We need to find a way to update our regulatory framework so as to attract capital. Banks are doing a whole lot in terms of creating, from a project viability standpoint. We have an African bank that have a project preparation fund to support early development stage funding of the project. They are also doing a whole lot in terms of doing different structures. But the fundamental thing is there is a need to update the regulatory framework to be able to attract capital. Thank you.
Thank you. Thank you all very much. Please, a round of applause for them. I'm going to try and push us more quickly because we are going to run out of time soon. And I mean, much of what you have said has already touched on this. What must Africa do? And of course, we're in the Africa Prosperity Network's dialogue. I'm very much focused on the continent, the Africa Union, the Africa Continental Free Trade Area, and the opportunities there. But we also have a global financial system that we must also work to address. There are many flaws inherent in there that also constrain, as you say, with policy and constrain innovation. And increasingly, there are new blocks. BRICS is one that is rising. And a lot of South-South and triangular collaboration can begin to be the leverage that we bring in. So in your kind of like last statements, I feel like commenting on a couple of things. And I'm particularly keen that we don't just use cliche terms. We often say PPPs, and yet we have very few examples of where they've actually worked. So even this whole, what must we do? Where are the success stories in your minds? And I'm really going to ask you to stick to just a minute each so that we can come back and wrap up. And also open the floor for the space around finance. And in case you didn't know, the royal father present here has a finance background, so I'm not going to let him get away without asking him for his perspectives. Fair warning. So what must we do on the continent? What must we do with others? What's the nature of this collaboration and partnership that we need in concrete terms so that when people leave this room, they scribble down something that they can go and act on? I'm looking to the middle of the room now, so I'm going to come to you, Sarata, and then come to you, Lamide, and then work my way back.
Okay, thank you very much. We need to prioritize cross-border infrastructure. So as it was said, let's put the resources and let's put the project where it needs to be within the continent so that we don't replicate things just to replicate, and we use our resources based on what we, where it best fits. The remittances, I think that this is something that, it was alluded before. You did mention 100 billion, which is a huge amount. How do we ensure that we leverage from that amount? It keeps on coming, it will continue on growing. So ensuring that we tap into that to actually make things work. From a country level, yes, but from a continental level, even more. So the likes of the free trade zone, the AfTA, the ZLECAf, we need to actually have those conversations so that we identify pockets where it's clearly where things need to be. So DRC, we know that there's a lot of mining there. There's a lot of water, electrification, power. Power is actually essential for development of any country, let alone the continent. The trade as well, in terms of where do we grow food? Where do we transport it from? How do we ensure that the cotton and the textile, the fabrics, making sure that the production that are being happening in Mali, in Benin, are then exported where it can be transformed within the continent. Those are the suggestions I would make. Thank you.
Thank you very much. David, your thoughts?
So I think the lowest hanging fruit is this insurance issue, pensions insurance. I think we have to address this legislation. It is low-hanging fruit. There's an imperative to do it. And if we are able to just unlock 5% of capital to be able to invest in long-term infrastructural solutions, will revolutionize the continent. So that for me is very, very low-hanging fruit.
Thank you. Let me go right to the very end and then work my way back.
I was hoping you'd leave me to last, so I could have more time to think about it. But honestly, I'm spoiled for choices because, trying to narrow down to what kind of immediate action, and there's succeeding stories that are emerging. Some of the infrastructure projects that we see, the superhighway, the Lobito corridor, and what have, there's stories that are emerging. And so let me be a little obtuse and say that because nobody can contradict me, I'm going to pick on something that you said earlier on, Mr. Chair, that the carbon market in Africa is unvalued. Nobody knows. It's difficult to estimate. But because of the nature of Africa and just the number of natural basins that we have, and they're huge. They're huge. And if you think of what Brazil is doing, you can imagine what Congo could do, what many parts of West Africa could do. And so you can't tell me that I'm wrong if I throw out a figure. But I know that there's statistics out there that say that if you put projects out in a single year of rollout, you could raise funding in a confident, verifiable, trusted carbon market in Africa. You could raise tens of billions of dollars. And so it's not a low-hanging fruit, David. It's not low, but it's the fruit of the future. And we need to start thinking about, the Chinese proverb that yesterday was too late to plant a tree. And I think that therein lies a source of capital that's truly African and global in its reach. I don't know if I've made any sense with that, yeah.
Thank you very much. For those of you who don't know, some of us live here in Ghana, when Jerry starts lurking around the microphone, it's not a good sign. But Jerry, I will not be intimidated now. I'm truly Ghanaian. So I'm going to come to my Olumide to ask you your thoughts, but ask you all to be precise and concise. And then I do want to give Osumanche a couple of sentences and then see whether Jerry lets us have some question and answer time. So.
Okay, thank you. So for me, a key thing that can be done literally within weeks is actually the commitment of government that have funded some of the outstanding DFIs in this country. We see what they have done. Simple thing, it's not going to kill us. If you simply double the equity capital of these DFIs, there are about 31 of them in Africa today, major ones anyway. You can probably quadruple or 10 times increase their value in a couple of years. The Ghana Infrastructure Investment Authority is capitalized with about $300-something million. Are you telling me that this cannot be changed and increased and doubled, even just by an act of parliament, within a month? They're already doing a fantastic job. They have parlayed that money into about $3.2 billion of investments that they are supporting. So it's a geometric impact. We have to catalyze, we have to increase that leverage. I think that will be one sort of like immediate action that we can see the results of before the end of this year. Thank you.
Thank you. I think that is a very valuable one. And I'm now going to come to my brother here so that I can end with a woman. Thank you.
Okay, thank you very much. I think I will just say one thing. The capital is out there. How do we attract the capital? So the question is, how will Africa create innovative solutions to unlock capital? When we create innovative solutions, the diaspora bond will be easy to invest in, the pension fund will be able to come into investment and will be attracted to the investment. So the question for the government and for all stakeholders is, how do we create innovative solutions that will unlock capital in the global market? Thank you.
Thank you very much. Please give the panel a round of applause. Sorry, I did forget. I wanted to end with them and then I forgot you. I'm so sorry. Antoinette.
Sure. Well, two things from me. Yes, the capital is out there. There are a lot of global funds that are looking for somewhere to put their money in an environmentally friendly project. So I think Africa has an abundance of green stuff, of renewable energy. We need to find a way to package our projects in a way that allows us to access some of these funds, even as we look at all the other options. And the final thing for me will be, we need to stop thinking like 54 different countries. We need to operationalize AfCFTA. We need to harmonize regulations. We need to remove trade barriers. We need to create an incentive for Africa to invest in Africa.
Thank you very much. I'm going to ask somebody to please pass the microphone. No, it doesn't. Yes. To our royal traditional ruler who's here, just to share some thoughts on what you've heard here before we wrap up finally on the panel.
Your Excellency, thank you, and to the panelists, thank you so much for sharing your insights. Before this life, I was a lawyer in Wall Street and in the city, so I approached this with both a legal perspective and a quasi-Wall Street perspective as well. And I'm so happy my friend mentioned carbon funding. My issue is that we have to get to a place in Africa where our regulatory and legal frameworks understand the creativity of creating and bringing capital in. I spent almost 80% of last year trying to work with various institutions and state agencies to work on green carbon funding and bring in our stock exchange into it. Thinking of what's happening in Dubai right now, thinking of what's happening across different European countries, and thinking what's happening in Brazil. The natural ability of Africa to generate financing, not just funding, financing through our own carbon markets, it's radical. And I know it takes more work than going to pension funds and going to insurance companies, but being a traditional leader, I'll put in a proverb that says, a country develops when the old men plant trees under which they know they will not sit. So if we put in the work now, in the next 5-10 years, the amount of capital we can generate to self-finance and move things forward is astronomical. And I'm hoping that the new governments we have across the continent and successive governments and private persons do realize that we do have this potential and are willing to put in the work and the creativity to get it done. So thank you, Your Excellency. There's my short words.
Thank you, Your Royal Majesty. I think that makes a case for the Africa Prosperity Dialogue writ large while we continue these conversations. I'm particularly really happy with the way we've honed in on some very specific areas around which over the next couple of days and before the presidential reflections on Saturday, we can start to think about, well, what can we get to move forward? I think sometimes when we talk about diaspora, we forget that it's money and remittances, but totally agree this is under-leveraged. In fact, in a panel today, somebody gave the statistic that 80% of that money is just spent. The 100 billion is just spent. i.e. it's not invested, it doesn't create any value, it's not leveraged, it's just spent on day-to-day survival. Imagine that, annually 100 billion just spent. So I think there are huge opportunities, both low-hanging fruits and areas, I think, His Royal Majesty says, where we need to invest. And the carbon markets, often debated as not necessarily solving the climate problem, but helping the financing problem on the continent is huge. And I think this idea that everybody, cross-border, everybody has to hold hands and connect, and collaboration is key, which is the essence of invest, connect, and integrate. So I'd really like to thank the panel and ask you to give them a huge round of applause. Jerry, when I look at my watch, it says I have 3 more minutes, and I just want to scan open and say, are there any burning ideas, contributions that have not been made by this panel? The elections are over in Ghana, so there's no need to grandstand. If you have something really important that we've missed here, I see a hand frantically raised in the corner, one over there, and please make it 30 seconds or I will cut you out. Microphone at the back there. Who's got the microphone?
Okay, I have the microphone here, sir, and thanks for the opportunity. I have one big concern, and everywhere
Can
I
you
go,
stand so that we can see you? Sorry.
Okay, I have this concern about all the conversations we're having here and wonderful ideas. And that concern is that at the end of the day, the people that will put judgment over all the recommendations that we make here are our political leaders. And when we look at the Americas, Europe, and all of that, we find that the people in those continents also have a very strong political culture that ensures that the best of the best come out of the process. At the end of the day, my concern here is how can AfTA help to galvanize other alliances and collaborations to ensure there is a very strong advocacy, in terms of how Africa can bring out its best, the best heads that govern our nations. Because bad politics, of course, gives us bad government, which gives us bad economy, because they're the ones who appoint economic managers. Right from fiscal governance issues and responsibility, even the issues around PPP understanding. If you don't have your best head, they can't wrap their heads around, right of ways for PPP, keeping to agreements, and all of those issues. Whether we have very bad debt-to-GDP ratio, debt service to revenue ratio, it's all about, lack of accountability. And a report that we read some time ago, mentioned that Africa, because the argument is that Africa does not have capital. There's this report that was very popular about 9 years ago, that the amount of capital Africa has is much more than what we go to borrow from the multilateral and other lenders around the world. So what do we do to unlock this capital? Even if they are stolen in quote, how do we get them invested back in Africa? If we can't solve that, we will speak all this grammar for decades and we'll still stay where we are. There is so much capital in Africa. Land is a kind of investment, our mineral resources. For commercial banking, I think that African commercial banks are lazy. We're doing lazy banking. I'm an ex-banker, by the way, and I haven't seen a bank in Africa designing a model that can give credit to people who don't have salary backing them. We play safe in our banking. We have very poor credit reference system where we can gather data that can enable people borrow without bringing the left leg of their great-grandparents and all of those collateral and so on. I have a lot here, but I think I have to stop here because of time constraints.
Thank you very much. Very passionately put. I had a gentleman over there, and did I see a lady's hand behind? Please make it short and sharp, but as passionate as the last speaker.
Okay, Mr. Chairman. Good evening, ladies and gentlemen. I'm Dr. Ohini Asante, Executive Secretary for the World Technology Forum. Let me recognize the work by Mr. Gabi and the work by the APA and Secretariat. My comment is very short, but I think sometimes we need to stop sugarcoating and see things as our people must head and continue to demand accountability. It is time for government leaders, civil society, and all stakeholders of society to come together and say that this is what Ghana must do, or West Africa must do, or Africa must do in the next 20 years. And we are doing it. If you go contrary to that, you will be jailed. My concern is that we have infrastructure plan. For instance, I work with the National Development Planning Commission. We have Ghana Infrastructure Plan. A president will come, he will administer his own manifesto, another one will come and will not follow the infrastructure plan. By far, we spend money drafting huge sums of money drafting huge documents, and nothing comes out of that. The other part is when we are bold and deciding that we have to do this for our people. And so wherever the money is, we must look for it. President Kagame, in partnership with Africa 50, he is doing Kigali City of Innovation. And you made mention of success story, which he succeeded. There are other success stories in South Africa, talking about the Eastern Cape Economic Development Landscape and Lobito Corridor. If not that, Samantha Power and her USA came to pump dollar into it, that confused the president. I'm sure we would have been on our toes doing something, but now President Donald Trump has canceled foreign aid to Africa. What must it say to us, especially in infrastructure finance? We just have few meters, Ghana Millennium Development Corporation and the Millennium Challenge Account, energy investment that they did to us. We have to think and look at how we can get money internally and finance that. One, intellectual property can pay most of our debt. We know how much our government bought Pfizer vaccine. And I believe that when we generate internal revenue, we can pay for our infrastructure for our people. Thank you so much.
Thank you, passionately. I'll only let a woman if there is a woman who wants to make a comment. Otherwise, I'm going to close this. We could run a whole 3 days. The one comment I will make is that on Saturday, as part of this dialogue, oh, yes, sorry, there is, please bring the microphone down to the front here.
Thanks. I appreciate everything that has been said. But what are we saying about ourselves? In Africa, we boast that there are about 400 million middle-class people. If those 400 million were to give $1 a day to a fund or more, to a fund for infrastructure, we will at least get more than $1 billion a year just from ourselves as individuals. Why don't we also include them?
This is a great idea.
Could be $1, $10, whatever. But let's also look at ourselves. What are we prepared to do before we ask other people to do things for us? Thank you.
Thank you very much. And if I summarize those, the key points out there about what are we doing ourselves, and questions about holding leadership accountable to long-term predictable plans and to policy frameworks that work for the continent.